Okay, it's 5 o'clock. It's Wednesday, the 27th of January, 2021. Got that right? And we're here to talk about the developments in technology around finance, insurance, banking. And we've invited Eugene Tang, who is the business editor of the South China Morning Post, very deeply involved in this report. He's talking to us from home, as a few of you are. I see there's a few people on the call. We've got people from Australia, Vietnam, US. Thanks for joining us. What we'll do is, as you join, please, if you can, put your name and LinkedIn profile in the chat so people can connect to you. It's the closest we get to networking in this environment, which is the main reason I set up Web Wednesday back in 2006, was to learn and network. And today we're going to focus on, it's quite a meaty report. So if you want to get your hands on it, you can go to research.scmp.com and use this discount code, WebWen20, and you get a 20% off. It's a very good report. I've read it myself, which is why I'm able to do this interview, and I obviously have knowledge in the industry. So let's get into it. Eugene, you are originally from Malaysia, I understand.
That's right.
And you studied economics, right? How did you go from being a master in economics to a journalist?
I have always wanted to be a journalist. I think I've always enjoyed dealing with information. I've always enjoyed analyzing numbers, and I've always been gripped since young. I've always been gripped by this curiosity to know who owns what. That's always been my sort of a signature question. Every time I go downtown or go along a street, I would ask who owns that tower, who owns that building, who owns that shop, who owns that house. And that sense of curiosity sort of expanded into an overall desire to know about things and analyze things. And that's what drove me to journalism.
So you went into you're working for, was it Bloomberg first before you joined SCMP, or what was the journey?
I spent I've been a journalist, business journalist for 26-7 years now. I started off with a small business newspaper in Malaysia called The Edge. 3.5 years later, I joined Bloomberg. I spent most of my time at Bloomberg, more than a decade, 14 years at Bloomberg. Then I was heading the China bureau in Beijing. And then I left Bloomberg for a brief spell on the commercial side of news at the Wall Street Journal, Dow Jones. And then I joined South China Morning Post just as the Alibaba became the new owner in 2015, 2016.
Excellent. Well, since then we've had 2 or 3 interviews of SCMP staff, so that was good. The most recent one was about the internet in China. I'm interested to see how it's narrowed down from the internet overall to fintech. And one of the things that I found quite eye-opening in reading this report is that, unlike other countries, it's not necessarily lots of small, nimble startups that are driving this. It seems to be that it's the people or the companies, the corporations, the big tech of China, who are driving innovation in banking and insurance. We've always known them as BAT, right? Baidu, Alibaba, and Tencent. But in the report, I realized you had Jingdong, JD, and a totally non-tech, originally non-tech company, Ping An, which is a very old insurance company, which is now leading all of these 5 companies now, leading the whole throes into fintech. So maybe you could explain to us a little bit about why it started amongst these companies rather than kind of nimble tech startups as you might have in, say, Silicon Valley or in Europe.
Sorry, the question is why these tech companies are leading the fintech revolution?
Yes, rather than more nimble startups.
I think one of the things you will notice with this is that a lot of these companies all start with a big captive user base. So in the case of Alibaba, it was the nearly 1 billion now users who use their online shopping, Taobao and Tmall. In the case of Tencent, the people who use their Wechat service and also play the games. In the case of Baidu, it's the dominant internet search engine in China. So therefore, a huge population of people who regularly use their search. Ping An, of course, has this it's the biggest insurance company in China. So again, a big user base. So from that unique, loyal base of customers and users, they are able to layer on applications, services, and harvest data from the user base, their usage habits, their reading habits, their shopping habits, where they go, and all that information, all that data is now able to feed on each other and basically create this network effect. And with that, they're able to really accelerate and spearhead experiments in fintech. So if we define fintech as how technology is being used to improve or enhance financial services, that's the origin, that's the basis of it. You start with a very loyal core group of users that constantly feed you with data, with usage, with traffic, and with revenue, and that is being used to feed off the rest.
That's quite interesting. So that's very different to a lot of the startups I know, particularly in Hong Kong or other markets. They come up with the algorithms and the software, but they don't have the data, right? So they're out there, they need the data to prove their models. So you're saying it's the other way around in China, is that these large companies have lakes of data and they're developing services off the back of that around finance and insurance, right?
That's right. That's right.
And what I think, in the report, it breaks down various areas. So maybe we could approach some of these. I like the fact that Jack Ma didn't call it fintech. He's, in true Jack Ma style, he's given it another name, right? He's called it tech fin, which I guess means technology companies driving financial change rather than financial companies driving technology change.
Precisely.
And one of the things I saw, and this was quite an eye-opener to me, is that actually these big tech companies in China are working very, very closely with Chinese banks. It's not a case of us and them, kind of the disruption thing that you might have, say, on the east and west coast of the US. Can you explain that a little bit and how that relationship works?
I think in the case of both, if you look at all these fintech companies, whether it's Alipay doing the payments, WeChat Pay, they are not licensed the way traditional banks are to take deposits. So they pretty much work in an asset-light kind of fashion. Their core business, or if you will, their strength is not to take money and make money out of money. Their core strength is the use of data, technology, augmented by artificial intelligence, the powers of cloud computing, on the basis of a strong, loyal customer base, and how all that come together to improve financial services. So they're not there. They're not created with a mission to disrupt traditional banking. In a lot of ways, they are there to answer a need for a lot of the services which traditional banks or traditional insurance companies, traditional financial trusts, asset management companies, or even stockbrokers are not able to provide. So it's a supplementary relationship rather than a mutually exclusive, disruptive relationship.
And do you think that's, on the surface, it sounds a lot more effective than the kind of banging heads model that we seem to have, in the West? Do you think this is a much better way to work with these established industries?
It works up to a point, right? I think objectively speaking, after a decade and a half of very rapid development in the fintech sphere, it's now come to a stage where regulators are sort of taking sitting up and saying, okay, let's regroup and take a look at this very rapid development in the industry. What is exactly the relationship between technology and finance? What is the role of fintech? Should fintech be regulated as banks, or should they be regulated as technology companies? How much money do you put into this application? How much money do you put into that service? How much skin do you have in the game? All those are questions which have not really been debated before in the industry, and now they're coming to the fore.
So you're saying for a while, with 10 years or so, it's been a bit Wild West. We've had a lot of I know when peer-to-peer first started in China, there was, within months, there was thousands of companies offering peer-to-peer lending, right? And then suddenly it took a while before the regulatory body got down and said, look, this is crazy. People don't really understand what's going on. We need to clean this up.
Right.
So I guess you're saying one of the disadvantages is that you have lots of slightly messy startups come into the market with no real target apart from maybe making quick money.
Take a look at Wechat Pay's growth. Wechat Pay is 7 years old. It really only began to take off and be established it was in 2013. So within that space of time, that span of time, it's taken up nearly 40% of China's online payments market.
And it all started with sending each other red packets, digital red packets at Chinese New Year, which is about to happen again. So it is quite amazing, really. I guess they had the footprint, right? So they could launch a very simple red packet service, which is what I like about it as a marketer is the tapping into the culture and just allowing people to do it in a more easy way, right? They weren't going out there trying to tell people this is a new way to do digital payment, scan a QR code. They just said, send somebody a red packet, which seems a very nice way to launch a service.
Right. Again, you start with, first of all, you start with this huge user base of WeChat users, customers. At that time, it was a very simple service. It was pure networking, right? Because Facebook was not available in China, and people were using WeChat to network. And it was not the only networking service at that time. There was Renren. People who have been in China long enough, you probably remember something called Momo. So all these networking services were available for people to just chat, exchange photos. And all of a sudden, they decided that they want to tag on a financial service. And a good way to kick it off was during a festive season when everybody was literally giving each other money. And from there, the stickiness of the application, of the service, of the usage habit just grew and grew.
What I find fascinating is that, in the startup world, the venture capitalists always look at you and say, have you got a product market fit, which sounds kind of slightly obvious. But I guess what you're saying is that a lot of startups they have an idea, they have a thing they want to change. They've always got to go out and find the market for that idea, right? I think what you've just described is actually these companies already have the customers. They already understand them there very, very well because of the data that they collect off them. So they're able to almost like design products and test them on that data. Is that what they do? I don't know if you know them well enough to know this, but do they kind of take elements of data and say, right, this is an interesting mutual fund, or this is an investment product, let's test it on this data and see if there's an appetite for it?
Yep, exactly. It's the reverse, as you put it. It's the reverse. So you start with a user base of, let's say, 100 million who regularly use you. They spend X amount of time on you every day for the core service, and you know that they spend X dollar per person over that period. So what can you do with this loyal user base? What else do they need? What else do they want to buy? What else can I layer on to what other need in their daily lives can I provide, basically.
That's interesting. Is I love it when people talk about China numbers, because it's like, just take 100 million people and do a test. In Hong Kong, we're going, let's try 100,000 or 10,000. And in Europe, it's like 10,000, maybe even 1,000. It's a bit like testing COVID, really.
Right.
So let's get into the actual product. So because the report is very interesting that you break down the kind of development of these products, right? So you've mentioned that these companies, Baidu, Tencent, Alibaba, Jingdong, and Ping An, have access to all this data. Where was the first kind of tranche of services that they got into when it came to fintech? I guess payments the first one, right? We talked about red packets, and Alibaba, off the back of their huge e-commerce giant Taobao and Tmall, obviously launched Alipay, Zhifubao, right? So where did they take it? What then took them? That makes a lot of sense if you're selling games or if you're selling product through online shops. What made them then want to go slightly deeper into the kind of banking world?
It's in a way it's organic, right? Let's start with Alibaba. So you have a payment service that was originally created to help merchants pay for their products, right? It was originally a business to business kind of a service. And then they went into business to consumer, whereby individuals like you and I can go to a Taobao or Tmall and buy something. Now you need a payment platform to pay for this. Traditional banks were not providing this service. Credit cards were very virtually unavailable in China. PayPal was not in China, so they created this. They extended this service for individual consumers to pay for the products. Then once you start doing that, you have a lot of money that is circulating within that system, within that platform. Money that merchants make from customers, and customers with money in their account that is sitting there waiting to be used for the next shopping cart, right? What do you do with that money? It's a lot of money. When you have a population of China, when you have hundreds of millions of users, a billion users every single day, that's a lot of money.
Do you recall the sums by any chance? I think it's hundreds of trillions of renminbi, right? I mean, it's huge.
Oh yeah, of money. So that money can be invested in the overnight markets. That money can be invested in the asset management. So very quickly, you find that Alipay becomes the world's largest money market fund, right? With that, you can also invite partners, providers of financial services, whether it's traditional banks or traditional asset management companies, to come in and offer their funds. You layer that on.
So that's where they came up. That's where they launched Yuebao, right?
Yuebao,
I understand.
That's right.
Which has, well, according to your report, it has 800 million users in 2019. I guess there's a lot more people by now. I don't know if it's. So Yuebao is the money market fund you're talking about. And how does that mechanism actually work? As in money market, you give cash to Alibaba and they store it for you like a fund, or how does it actually work from a user perspective?
So that you can subscribe to a range of financial services provided by third-party partners, right? Okay. All these third-party partners will sell their funds on that platform, and you can select whatever tenure or whatever investment horizon that fits your risk appetite.
So in a way, Yuebao becomes like an independent financial advisor. You've just got. Do they give advice, or they just give it to you like a supermarket where you can just go and choose? Is there some kind of categorization, or is there some automatic robo investing going on, or is it purely you just go and pick and choose?
It's more of a financial marketplace than an advisor. They all these based on your shopping pattern. We know that they know what kind of a risk profile you have, and the certain products may be more suitable to your risk profile. AI can come in and provide that level of insight.
So rather than doing the kind of clumsy risk profiling that we get in Hong Kong, where you sit down with a person and they take you through and they tell you you're risk adverse or highly speculative, you're saying this has been done behind the scenes with data that's analyzing your behavior in terms of what you buy on Alipay or what you're doing with WePay, and then recommends to you relevant funds.
That's right. So investment is one thing. So once you have customers who need to use that financing, lending or credit loans become the next step. You're buying something and you find that your balance is 200 kwai short, right? Maybe a quick small consumer loan. You are a merchant and you have to take in an order. You are maybe 10,000 kwai short. You need to take a quick loan from the platform. That is being able to, again, it's an additional add-on service that they can quickly branch into.
And you said it's interesting is that those loans, I think you mentioned that if a traditional bank will take a while to kind of lend you that, particularly if you're a business. You're saying some of the, because of the analytics and the data these big guys have, they can turn around that loan in, what was it? So, correct me if I'm wrong, 7 minutes, 7 seconds. What was it? Some very short period of time.
It's split seconds, because all these big data is able, and the power of computing. Your shopping habit is known. From that shopping habit, you are able to they're able to see, pretty much create a profile picture of who you are, what your tendencies are. What your payment history has been, because you are a shopper or you are a merchant on that platform. So all that record is available.
And I guess a bit like, in the States you have, what is it called, Axiom, or you have, in the States they use your postal address to kind of slightly qualify you. I guess here they have all that data as well, right? They have your telephone number, they have the address, so they can use various data points to grade you as a borrower of money. Right.
One of the interesting aspects that we found out from looking at this was addresses where your physical shop or your virtual shop is, your address actually, and traffic condition actually affects your ability to pay. So, for example, if you are in a part of town that is where the road or the highway in front of your house is going through a construction period. Traffic has been held up, chances are that your business is going to be affected, and that would impact on your ability to repay. So interesting.
That's interesting. Is every time I've been to China, it's exactly the scenario you described. There's construction everywhere, right? I guess this is also even more relevant nowadays with COVID, because they're able to look at the traffic and guess whether your business is doing well or not based on people's movement, although recently that's not such an issue. But obviously, so let's look a little bit into, I think what's interesting here is in the evolution from payment into currency, right? When I was a little kid in England, the first thing I heard about China was that they had invented gunpowder and money, right? Or paper money. So tell us why the Chinese government would want to go down the route of digital currency. And I know you educated me before, the currency we're talking about here is official government currency rather than cryptocurrency. But maybe you could explain, considering you've got these big players that like Alipay and WePay who've got such a commanding position in the market, why would the government want to launch their own digital currency?
There are several things to unpack here. I think the first thing to start with is your payment platforms, whether it's Alipay or WeChat Pay or JD or anybody creating a e-payment platform. These platforms are not minting money, right? these are just wallets of
Okay.
one sort or another.
Stored value is what we call them in Hong Kong, right? They're stored. Yeah.
Correct. So Napoleon makes his salary or gets his money from a source of income that is put into the financial system. He transfers a bit of that onto a Wechat Pay account or a Alipay account. You use that for consumption, for consuming. You are actually, nobody's minting that money. Alipay is not minting money. Wechat Pay is not minting money. That money still comes from the central bank. But the central bank also wants to have also recognizes that money is now becoming, cash is becoming digital nowadays in China. So you need to be able to get into the game whereby you have a say in how all these things are being run. So there are several advantages of having digital cash. It's classified as the same as what we call M0. So it is basically a digital version of your dollars and notes. I
remember that from my basic economics. M0 is the money supply, right? In the country, right? The actual cash that's flowing around. So they add it to the money supply.
So it's a digital form of it.
Okay.
But by making it digital, you start to be able to have a clearer picture of how money flows, how money is used. The data that is behind it can show you how money flows from A to B to C to E to D to E, right? The path of money would actually accelerate and amplify the ability of the financial regulators or the government if they want to do in terms of monetary policy. The thing about monetary policy is when you raise an interest rate or when you cut an interest rate is something that affects the cost of money across the board. It is typically a very blunt instrument to achieve an objective. And this has been tried before. Earlier on in the last year when China was going through the first few months of the coronavirus, some local governments were trying to inject some money into the local community to stimulate demand and help some of the local communities relieve their financial stress. So they partnered with, in one case with Alipay, in another case with Wechat Pay, and they distributed the money just like that digital hongbao that you were talking about with Wechat Pay through that platform. And that platform is able to immediately tell the local authorities whether that money has been spent, where that money is spent, how that money is spent, and you can immediately detect and monitor the efficacy of that stimulus. So rather than cutting interest rates that affects the entire country, that is not being felt in the same way across the entire country, you can do a very surgical stimulus policy. And that is something that can be done with the use of digital cash and digital currency.
It's interesting. That's very topical. I mean, in the States, right, they're doing this PPP, and I bet you they would love to know where that money is going, because for all intents and purposes, it seems like it's going to the wrong people and being put in the stock market rather than being spent on the right things. So I guess what you're saying is one of the purposes is the ability to see transparently into when you do some kind of boost to the economy, where that money is going, right? Where it's being spent.
Right. That's right.
The other one, I guess, is I read in the report you were saying that there were some other functions, like at the moment when you pay, it's all through QR codes, which are they're everywhere in China, like a rash, and that it introduces new technology like NFC, where you don't, near field technology, we just basically clink a phone against something rather than having to scan something. That doesn't sound so revolutionary, but I guess the idea that you can make it interoperable and you can manage money across, or you can pay across all platforms is, to me, would be appealing, right?
That's right. That's right.
And how about the issue of I guess anonymity? I mean, we know that in China people are sensitive, and not as sensitive, say, as Germany or the UK or whatever. how does that work? You mentioned controllable anonymity, I think is what it's called. So how does the anonymity part of it work? Because if you had the government spotting everything you were spending money on, surely that's a bit nerve-wracking.
That somehow doesn't seem to have caused too much of a problem. I don't know. I think Chinese users have a very strong propensity to embrace all that is new, try everything that is new. The smartphone is everywhere. It's ubiquitous in China. Close to 1 billion phones in circulation, of which 2 out of every 3 phone is classified as a smartphone. And there's no hesitation of embracing e-payment or any of these kinds of technology.
Okay, it's interesting. I mean, I think if it parlayed into Hong Kong, we'd all be a little bit more nervous about it. Talking about Hong Kong, where do you see, you're here, I'm here, and Hong Kong is a financial center. And funnily enough, I did a little poll when we first decided to put this event together on LinkedIn saying, does Hong Kong have a chance of survive? Is it an innovator in finance? And the answer was yes or no chance. 70% of the people said no chance. So they weren't particularly positive about, and these are people, I guess, mostly live in Hong Kong, that Hong Kong is positioned to be a kind of financial or a fintech innovator. I know that we have a few companies like WeLab, and I mean, Ping An has kind of moved here, and there's a lot of people, these fintech companies doing IPOs here, but really as a center of innovation for technology around banking and insurance, do you think there is a role for Hong Kong?
I'm sure there is a role, but the role will be different and probably not very comparable with what you're seeing in mainland China. Now, don't forget that the reason that all these fintech giants are able to thrive and grow so big is because they served a purpose. They solved a problem in usage. In the case of Wechat Pay, it was to enable a wildly popular super app to double as a wallet, right? Because you are using that super app for your daily interaction. So that payment, the ability to pay for your meal, pay for your utilities, to pay for whatever, is just an extension of that need. For Alipay, it was to solve the need to do business. Banks, traditional banks, were not willing to lend money to small consumers to pay for your shopping, or your small merchant to pay for your whatever goods you're trading. So that service served that purpose. Now, Hong Kong's fintech future depends on what the solutions, what these service providers, what solutions they offer, what problems are they trying to solve. Hong Kong is one of the most overbanked cities in the world. There are 165 licensed banks in Hong Kong.
That's incredible. Does that mean we all have multiple accounts? It's a bit like mobile phone accounts in China. We've got 2 SIM cards, 3 SIM cards. Why is it so overbanked? Is it just the nature of the immigrant population here who stick with Zhejiang Bank or stick with their clan?
I don't know. I think it's history. It's the history of the way that pretty much anybody at that early on who asked for a bank license was able to get one. So you have 165 licensed banks, but there are a handful of banks that dominate the majority of the business. Whether it's a loans business or savings, the deposits, asset management, or whatever, or wealth management business, with a lot of small banks fighting for scraps of the business. Now, somewhere in there is a problem, and there are probably a myriad of problems in the traditional banking world, which is why Hong Kong's government has created, Hong Kong Monetary Authority has awarded multiple virtual bank licenses. There are 8 of them given out. This is one way of addressing of forcing innovation and among the traditional brick and mortar banks. Now, of course, that's not the only way of doing it, because virtual banks are, at the end of the day, still banks. Obviously, they are, because they are virtual by virtue of the fact that they are virtual. They have to embrace fintech a little bit more closely than your traditional banks, but they are not, in a way, strictly speaking, fintech companies. A lot of other fintech startups that you're familiar with probably offer some kind of solution that can solve a problem within the banking world. Now, that solution can either be bought over by a bank to enhance and improve an existing bank's services, make a bank even more efficient, more powerful, or it can be set up in a way to try and disrupt. But Hong Kong doesn't have that population base. That we go back to that user base of 100 million or whatever. Hong Kong doesn't have that, so you're not able to build to scale. You're not able to depend on this loyal user base to fund you.
I think it's very interesting what you just said, because I'm just thinking about all the people I know in the kind of technology startup world. You know, in the early days, say 20, 25 years ago in Hong Kong, it was people selling trading desks to the banks, right? They were, I guess, digitizing the trading, the kind of trading desk experience. And then it kind of got extrapolated into us buying shares, and we had companies like Boom and 8 Securities and all these companies who launch, and they allow you to basically, as a consumer, buy stock because the banks were just too slow, or they didn't have the mobile apps, or they charged too much. So you had all these small, nimble players who set up security trading. And then, along came the banks rather reluctantly and slowly. But what I think is interesting here is the banks have set up innovation teams, but they don't, this is going to sound very judgmental, which it is, but they don't really seem to have launched anything particularly revolutionary. I think the closest we've got to it is the Pay Me service from HSBC, which was basically interoperable between all the bank accounts that you could, go out to a restaurant and initially kind of share the meal with friends through an app. And then eventually they launched it for businesses. So it's a bit like a QR, learning from China, using it as a QR code to pay for a business service. And now they're launching kind of, it seems like shopping catalogs off the back of it. But it doesn't seem, maybe I'm missing something here, but I haven't seen every really revolutionary innovation from here. Maybe people like WeLab, but what the companies here tend to do is very quickly go across the border because they need access to the volumes of data that you just talked about.
Well, that's the dilemma that the industry is in, right? If you work for one of the big banks, right, and you make 40% of your global revenue out of the city, right? Are you going to allow a colleague or a subsidiary to start a moonshot lab that will kill your golden goose? Probably not, right? So whatever that you do will have to be an enhancement, complementary to the service that you are currently providing, because you've got so much riding on it. The cost of disruption will be greater to you than it is than the benefits.
So
right?
why haven't the big tech companies from China come and partnered with the Hong Kong banks in the same way they have successfully with China banks? They've launched services off the back of that. Is it just the market's too small for them? It's too overregulated or overbanked, as you said? What's the issue? There's no.
It's a city of 8 million people. Alipay.
Yeah,
Alipay,
but we're damn smart and hardworking. Oh, we used
Alipay. Alipay is available for use in Hong Kong. So is Wechat Pay, but
yeah.
It's definitely nice to have that service, and I think any business would want to be in a place like Hong Kong. But again, we're talking about businesses that thrive on hundreds of millions of customers, and from there they can extract a lot of value out of that that network effect. What are you going to do with 7.5 million people.
Yeah, exactly. Question crossing all of our minds. So let's get into, we've mentioned about Hong Kong, but there's a lot of talk here about the kind of Greater Bay area, formerly known as the Pearl River Delta, which I think is much more descriptive and poetic. So how do you see that kind of playing out in the fintech world? I mean, we've got people like Tencent just across the border in Shenzhen, and and they're obviously listed here, and there's big teams here, big teams obviously across the border. Where do you see, is there a move to kind of launch services in this space, particularly in trade and all the manufacturing-based trade finance? Is there something creative you see coming out of that?
That is a very interesting segue, and it's actually I think it's in my opinion it's a very promising future for Hong Kong, really, because that solves the problem that we've been talking about, the very small population base and market size. So the Greater Bay Area is, as everybody knows, it's a collection of 11 cities in Guangdong Province, including Hong Kong and Macau. So 9 cities on the mainland, Hong Kong and Macau, so that makes 11. Combined population of estimated about 70 million people. So 10 times bigger than what Hong Kong is. Combined population of roughly 1.7 trillion US dollars. If it were an independent economic entity, it would be somewhere in the 11th or 12th position in the world. So
it's the size of what, South Korea, I guess, in terms of population.
Bigger than Spain.
Bigger than Spain, but South Korea maybe, right?
Right. So it's a huge market. So yeah. If you're a business, setting aside fintech for the time being, if you're just running a small business, your market size just grew tenfold, right? So if you're running a fintech business, fintech startup, again, your market size just grew tenfold. It's also one of the most affluent population clusters in the country. This is the manufacturing hub of China. This is the factory of the world, right? Some of the wealthiest people and households are there. Some of the largest companies in China are there. So again, that's a very good testing ground for a lot of services, business, new ideas, and new technology. And what the government is trying to do between mainland China, Hong Kong, and Macau is to conduct a series of experiments with the Greater Bay Area. Now, most of us know that China's economy and currency and capital accounts are closed. You are not able to transfer money in and out. If you want to open an account in Beijing, you have to physically fly to Beijing, present everything in triplicate, spend a couple of a long time and open an account. You have to show that you actually have employment and all that. Right? It's very difficult. Try and transfer money out of China. It's very difficult. Try and buy insurance, living in Guangzhou, buy insurance in Hong Kong. Literally, you had to carry money in your suitcase and walk across the border. Or
those stripy bags that people used to carry, right?
Right. Try to buy a wealth management product. If you're a gazillionaire living in Guangzhou and you want to invest your money in Kuaishou's IPO or invest in something a little bit more sophisticated, you just don't have that option. But within the Greater Bay Area, a series of experiments are ongoing. So something called the Wealth Management Connect, which enables you to be physically in Guangzhou or any of those cities in GBA, buy a wealth management product with HSBC or any one of these big banks in Hong Kong without physically leaving Guangzhou, and vice versa.
Is this a bit like an application of, because there's always been that kind of stock market connect, right? Where you can have funds from China invest in stock here. You're saying beyond that, it's a wealth management.
This is beyond that. This is okay. This is wealth management. So you can do you can do the opposite. You can do the opposite. You can sit in Hong Kong and you say, okay, you know what? I want to buy that apartment in Jiangmen because it is about 5% the price in Hong Kong. Now I want to apply for a loan. How do I apply for a loan? Can my Hong Kong loan finance my purchase in Jiangmen? Maybe yes, if you are with a bank that provides that service, good for you. But if you're not, how do you do it? Right? So these are all experiments that are slowly being tested and opened up.
And these have been run with the big tech companies, the fintech companies we talked about, or these have been run with more established kind of traditional finance outfits?
So this is across the board. So these are policies that are across the board. So these are policies that are sort of broad macro policies that allow this kind of cross-border investment and transfer of funds to happen. And once that becomes possible, it becomes really interesting, because your Hong Kong-based fintech startup will have the barriers of the capital account, of the currency convertibility lowered, right? Those barriers are no longer as onerous as they used to be, because all these barriers have been lowered. Now, and then you have a market that is 10 times the size of Hong Kong's. So a lot of possibilities become, a lot of potential.
And that's it's an interesting way of looking at it. Do you see because I talk to a lot of investor crowd too, do you see them seeing the story, buying into the story that you just told, in terms of the opening up to 10 times the size of what they normally see here? Or is this something that they're keen on, or they're all a bit nervous because of what happened with their investments in peer-to-peer and then the failed Ant IPO, which we can get onto later?
I think this is a long term. This is a very long term thing, and there are a lot of question with its execution. In the Greater Bay Area, there are 3 different currencies. There's the Hong Kong dollar, which is convertible. There's the Macau Pataka, all right, and then there is the renminbi. Renminbi is non-convertible. So in order to make this Greater Bay Area work, it will have to be a, if you will, capital accounts opening light, sort of like a light version of the full opening of the capital accounts within the Greater Bay Area. How is actually going to be done? How is actually going to be executed? It's going to be difficult. But if they can do it, they probably can. It probably lays the foundation for the opening of the entire Chinese capital accounts, which is what everybody has been braying for decades. But first they have to figure out how to get these systems to work within the Greater Bay Area. It's not going to be easy, right? If you try, for example, if you try driving from here to Zhuhai on the mainland, you actually need 3 different insurance policies to be fully covered. Okay. There's one set of insurance rule. If you're a driver, if you've got a passenger, front seat passenger, there's 3 different classifications of how that person is insured. Right? This is just one of those very basic things, daily life things that you have to figure out to make Greater Bay Area work. But if they can figure it out.
Yeah, I mean, that's interesting. I hadn't thought of that. That's an interesting point, because I guess in the insurance world, I mean, that sounds to me it's a great opportunity for some nimble startup to get in there and have some open platform to be able to make these 3 different types of pillion insurance work, right? Can they do something very open data-ish kind of approach to things? And talking about a nice segue to insurance, actually, obviously within the finance world, Blums and myself actually a couple of years ago took a whole bunch of European insurers, executives, to Shenzhen to kind of, like a Silicon Valley trip. It was going on a safari to Shenzhen to learn about the latest, greatest things in insurtech in China. And they left kind of mouths agape and had to create products off the back of what they'd seen in China, which was very eye-opening to me, was taking Europeans to learn from China and create products based on that. Are you seeing a lot of that, where the insurance, I mean, I know you kind of the data element you mentioned, the ability to profile people is very essential in insurance, right? The ability to to when you profile somebody's risk, when you underwrite an insurance product, seems to be in the hands of the big guys again. Do you see this? Is this an area that they're very strong in as well? I know that we went to see Wechat, which is owned by Tencent, and they were painting us a picture of being able to sell all types of insurance off the back of Tencent's platforms. Like, you're about to take a trip and up pops travel insurance. So are you seeing insurance being very much taken up by the same 5 companies? Obviously, Ping An is in the insurance business. I guess they lead it, right?
Yes, Ping An is the biggest player. Interestingly, I think the more or less consensus is that there's a lot that Chinese insurance companies can learn from global insurers, like especially the ones in Hong Kong. There are a lot of insurance companies in Hong Kong, and they actually offer a broader, a wider selection of policy types, which a lot of Chinese companies, insurance companies, are only beginning to learn to adapt. Again, I think my personal feel is that this is grown out of a different kind of environment, right? Hong Kong's environment, with its population, with its very aging population, some of the longest living longevity in the world, has a greater selection of, say, health insurance compared with say China, which is why you do still find a lot of Chinese households, in addition to trying to store away their currency elsewhere, also come to Hong Kong to buy insurance. It was not too long ago when something like 40-50% of every new insurance dollar sold in Hong Kong was bought by a mainland China customer.
Yeah, I remember going to my insurer, and they'd have it in the same building. You could go and have a medical checkup in the office next door, and then buy an insurance product, which was cleverly disguised as an investment. And there was a long queue of mainlanders signing up. So I think that got clamped down upon quite quickly. But that's an interesting area, because obviously here we have Zhong'an, right, which is, I guess, a joint venture between all of those big players, right? They launched their tasked, I guess, with launching new insurance products. Where do you see that? I mean, in your report, they mentioned there's some kind of crazy ones off the back of binge drinking around the World Cup, or all kinds of creative things that were going on in the insurance world. But where do you see that going on?
One of the more interesting things we've sort of discovered in the insurance world is this crowdsourced kind of low cost what they call common aid program. So it is to allow, for example, for a few of these fintech companies have them. Baidu has it. Alibaba and Group definitely has it. What they do is they pool together, say 100 million people, and for a very small average cost, you provide medical insurance to members. So you basically share the medical bill out of a panel of 120 different types of illnesses. You share that medical bill across the entire membership, and it works out that the average member just needs to pay for a very small amount of money, $27, and you're able. So
it's a bit like applying the Pinduoduo model to insurance, group buying kind of insurance.
Without the competition, without the social.
So there's no gamified social.
There's no gamification.
You're competing for the best premium.
Right.
That's interesting. What do they call it? What's the name of that in Chinese? I know you were common. You said it was common aid. Does it have do you recall the name in Chinese?
N groups is called 相互保.
All right.
Yeah. So mutual aid.
And now, I mean, let's talk about. We'll take another 5 minutes before we open to questions, because you've said you can stay on a bit longer, which would be great. One of the things that is obviously we're in this very balkanized world at the moment, thanks to the previous president of the US and other people. But where do you see this, the kind of global expansion of these tech companies? Because we all know that Tencent and Alibaba have a footprint, in many, many countries, and they bought, particularly Tencent is very quiet about doing this, but apart from gaming companies, they've bought into e-commerce companies across Southeast Asia, India, Europe. They bought into finance companies. Where do you see the kind of global expansion of the China offering? Because they've got, like you've just described, they've got very robust models. They've got the population and the data that they can test stuff on. Obviously, it's a different culture. But where do you see this expansion going, and how is it working?
Definitely, all of the Chinese tech giants are making big push overseas. They're looking for greenfield businesses. Southeast Asia is one of the hot areas in the past couple of years. Some companies like Xiaomi have gone into India for their smartphones. Some companies have made push into Africa and Europe, depending on their products and depending on their businesses. But definitely, overseas push, international growth is part and parcel of that evolution. But what works in China obviously may not work elsewhere. We talked about how Chinese consumers have a propensity to embrace all that is new. That is probably true of a lot of other markets as well. But the sensitivity of, for example, data privacy may not be shared elsewhere. So obviously in Europe, the data privacy is a big thing. So you may not be able to roll out the same kind of service or roll out the same service, but find the same reception in a market like Europe.
But that's interesting, is I do a lot in the e-commerce space, and the Chinese e-commerce players or big players have all bought into Lazada and various e-commerce companies, and that seems to be working very well. They're applying a lot of their learnings from China, not just around payment and escrow and all this, but how to deal with small businesses, how to then get around the live streaming and the marketing. They seem to have applied a lot of the cultural norms that apply in Asia, of seeing people on screens and not being shy about it, and using emojis and all that thing, seems to really take off across the whole of Asia. And I guess privacy is a less of an issue there, but nobody really cares in this situation. You're buying makeup or nappies or whatever it is that you're buying. But
that's not fintech. But that's not fintech, right?
I understand.
Yeah, that's a game.
But there is a fintech element to it. There's a payment element, right? Where Grab and all these guys, they're learning from the China way of managing the payment side of it. Right?
Yes, that solves the problem of payment, right? Yeah. But can you use, for example, payments for shopping in on Lazada? Can you apply that to consumer loans?
Yeah,
I don't know. Can you apply that to asset management? Can you apply that to some kind of a mutual aid insurance platform across Indonesia using the same kind of business? I don't know.
Possibly not. Yeah, good point. And maybe the final part I want to ask you about is about blockchain, right? In Hong Kong, we've had a lot of, Hong Kong is a kind of blockchain crypto center, right? Being full of opportunists. But I know that in China, it's slightly divorced now, the blockchain and the crypto element. But even President Xi said that, we want to seize the opportunity for blockchain in China. And there was a big wave of kind of blockchain startups off the back of that. How are you seeing that being applied? I know that Ant, in your report, it does talk a lot about Ant using blockchain in various forms, quite quietly, rather than the kind of, tin banging we get in Hong Kong. But where do you see, is that really being applied successfully, or is it just kind of test beds?
I think it's probably at a test bed level. I suspect that everybody on this call, there's enough knowledge about blockchains that we can probably honestly admit that we are still some ways yet from seeing a killer app based on blockchain. A lot of it is talked about in financial services, in trade financing, for example, in contracts and all that. And certain elements of it can be applied in one app or the other. But honestly, I don't know. It might just be my lack of might just be my ignorance, but I don't see a killer app out there that is completely riding on blockchain technology.
It's funny you say that, because when blockchain first came along, I went to a few software engineer friends and said, "What do you think about blockchain?" And they were like, "I can build all that stuff in the software I have already." So there didn't seem to be so much of a thing there. But is blockchain being used in the digital currency that's being tested at the moment, or is it not really a core element of the offering?
It was. It is supposed to be driven by a certain aspect of blockchain technology. It is the record keeping of the money flow from A to B to C. That is pretty much it, I think. Excellent.
Well, it's 6 o'clock, so I really appreciate the time that everybody's given us for you and me to chat, but I'm sure there's some pretty good, smart questions out there. So maybe you can stay on for another 15, 20 minutes if you're happy to do that. Sure. And I see what I'd like to do is, if you have a question, maybe if you haven't typed it in here already, you can put your hand up or whatever. Maybe I'll take a question from here first. Blums, are you still there? I guess he's not. Let me see. I'll go into a different view. Are you still there, Blums? I think not. See if he had a question. No. We have a question here from Christophe. Are you still there, Christophe? Hello, Christophe. Would you like to ask your question if you're still there? Can I see you? Please unmute yourself and ask the question if you're still there. If not, I will ask it on your behalf. So Christophe asked, he likes the term overbanked. Is it comparable to over-hospitalized? Like the more hospitals a nation needs, the sicker the population. Good question. I wish Christophe was here to ask that. That's a witty question.
Does that mean that the more banks there are, the richer the city is, or the poorer the city is?
It's the other way around, I guess. If more hospitals makes you more sick, does more banks make you less rich? I don't quite know that. Maybe he could put the. That's why I like to have the person ask it themselves. Let's do this. There's plenty of people on the call. I'm not going to take questions from the chat. I'm going to let you call out. So anybody there want to ask a question, please unmute yourself and wave, or who do we have who's about to introduce yourself and ask your question?
I'm Napoleon. It's your long-time caller.
We can't hear you very well, Gordon. You're a bit tinny. Can you?
Yeah, I'll sit a little bit closer. So Eugene, I understand the need for being able to move money within the Greater Bay Area, and China's making it quite easy to get money in. But what's the point of being able to get money in if I can't get money out?
Okay, I'm going to repeat that because it was like really bad walkie-talkie sound there. You were saying that it's easy to move money in within the Greater Bay. I presume you mean specifically into Hong Kong, but what about moving money out?
Well, no, I'm actually talking about China.
Okay, sorry, the other way around.
Yeah, so in China, the fact is that money has no value unless I can use it everywhere.
Okay, man, you've got to fix your microphone, but yeah, if you can move, you heard his question there, Eugene.
Is that better?
No, not at all. Anyway, let's pass it to Eugene to answer.
What was the question?
If I understood it correctly, he's saying, it's you can move money in to China, but how about moving money out? It seems to be the challenge, particularly with this kind of Greater Bay. And I guess the segue to that is the fintech world facilitating that in any way.
This has got to do with China's currency controls, right? That's the macro picture, right? Can you move? If you want to move money in, you have to show that you have a purpose, you have a reason for doing so. You are either an employee residing, a resident of the country, you're doing a business, therefore you need to invest, you're investing money, or you're bringing money on a personal capacity. And when you leave the country at the end of your employment, you take the money with you. If you're an investor, you are able to repatriate your profits or the dividends from investments. There are lots of rules of being able to do so. Those rules are very onerous, right? If you use your salary from China to buy property, for example, which a lot of people do over the years of 10 years of living in China, people pick up property and whatever, and you sell that property, you have to pay a tax on the capital gains out of that, because literally every cent has to be accounted for. So, but in the Greater Bay Area, they are trying to make it a lot simpler, less onerous than it is in Beijing or Shanghai. And that is the experiment that we're talking about.
Excellent. We have one more question here from William. Are you still on? I can't see William. Are you here, William? No, he's not here. All right. Any questions from those of you who are still here? Please wave or just Lums, you've unmuted yourself.
Yeah, Eugene, like great presentation. I think my question was around what would be like the one or two things, like changes from either a policy or a consumer or market take-up thing that you will think will help accelerate the benefits from fintech. Let's use, for example, the GBA as an example. Like, what are the one or two things that you think will really unlock a lot of the growth and the benefits being felt by consumers and the market?
I think right now the fintech industry, as you know, is going through a bit of a reassessment period. The result of the last 10, 15 years of rapid development has necessitated the regulators to sort of take a pause and catch up with the rules. We talked about a lot of examples about how tech companies were able to leverage on their user base to layer on services for their customers. But now people were never asking the question, are you allowed to do that? Right? You've got 100 million customers using your service, and now you decide that because they spend X hours a day on your app, therefore you can sell them an extra something. Used to be you should just go ahead and do it, and nobody asked, is that possible? But now people are asking, is that possible? And as that happens, as the rules get unfold, people are taking a wait and see. So the first thing that needs to happen within the Greater Bay Area is for this to settle down, for the rules to be clarified. What can technology companies do? What can fintech companies do? Are you able to lend at 50 times leverage, or are you supposed to lend at 3 times leverage the way banks are, right? If you're a fintech company, are you supposed to be regulated like a bank, or are you supposed to be regulated like a tech company, right? So that's the first question that has to be answered. If you're a fintech company, are you allowed to go from payments into insurance to asset management to loans to whatever, or not? Or does that journey have to stop somewhere? So again, that needs to be answered. Then the second thing that needs to be done for the Greater Bay Area is to figure out how the existing barriers can be lowered, right? How do 3 different currency systems interact with each other? The Hong Kong dollar is a convertible currency. The Macau pataka is tied to the Hong Kong dollar. The yuan is a stronger currency, but it's non-convertible. How do these do these interact with each other? Figure that part out. Then that will create that that opportunity for fintech companies to really take off. Because otherwise, right now, if you are
market by market.
Yeah, you're still working on 3 different markets, right?
Yeah. Yep.
So that's interesting because it reminds me of when I was a student in China many years ago. They had 2 currencies already. There was the renminbi for native mainland Chinese, and there was the Wechat, which was the FEC it was called, which is like a kind of a cushion currency for buying foreign goods. Do you think this would be a solution where they introduce a kind of parallel currency, maybe this digital currency, that would play across all 3 territories and be the kind of overall currency that we trade in?
Probably the digital currency because of its technology, because of its speed of transmission, can play that role. If you think about it, a lot of our daily lives are already digitalized, right? If you walk somewhere, if you go across into Guangzhou to buy, and you want to buy a hamburger or whatever, all that currency conversion is done at the back end, right? As far as you're concerned, you just take your app and you just swipe whatever, and just like a credit card, you use a credit card to swipe for a hamburger, and that conversion is done in the background. So with the digital currency that is convertible and translatable into Hong Kong dollar or the Pataka, that would certainly be one of the things.
But it's all, I mean, it's all going back to your comment about the big guys who run the payment systems. What you've just described already exists with Alipay, with Taobao, right? A lot of people in Hong Kong buy regularly from Tmall or Taobao, and there's logistics firms that will deliver it into Hong Kong, but you get it converted automatically into Hong Kong dollars, right? You pay, it's already happening on their platform, so they must have access to a lot of data, and I don't know what kind of fluctuations in there, but there's a lot of currency exchange going on there.
Yep. But you have to be an Alipay or a Wechat Pay customer. What if you're not? What if you're a loyal Octopus card user? What if it's none of the above?
Yeah, interesting. Okay, we've got a question here from Villa Kunmala. Is that how you pronounce it?
Yes. You guys can hear me?
Yes.
Yeah, no, so I was wondering more about, sorry, I missed a bit of it. I was a bit late, apologies. Very interesting discussion. I was wondering, because enterprise technology and banks are basically, they have lots of legacy that they invested on. And then I guess the big story is that fintechs come and take over, and China has developed, high volume backend systems for supporting these fintechs. I mean, is there any technology products or companies that actually come from China and go global, or that they sell to Western fintechs, or that I don't know if this relevant question for the report, but I think it's
that sell to fintech companies.
Yeah, I mean, is there any? Can you see any technology company coming from China? Because I guess who develops all the backend technology for, supporting these fintech businesses? I mean, they run on cloud, I suppose.
Right.
But there must be some products out there also, that they use, right? I don't know.
So N Group provides a white label financial payment system for companies. So if you're in Southeast Asia or anywhere in the world, basically, and you want a payment service, you want to start your Kumala, Pay Kumala service.
That's a good name, actually. I'll go for that one.
You can call up N Group and say, I want you to come in and basically set it up for me, right? The entire system, the entire the financial infrastructure with all the computing and all that. Yeah, they do that.
Cool. Okay.
Isn't this what they're doing in their part? You missed this maybe earlier, Villa, but
Sure.
This is what they're doing in their partnership with banks, I guess, from the report available at research.scmp.com, is that it actually talks that the big tech companies actually went or go collaborate with banks and say, I've got the technology, I've got the payment mechanisms, I've got the claims, risk reduction software, I've got the profiling, all that information. I can plug it into your banking services and I'll be your tech partner, right? This is what they're doing already, right?
Yep.
So I guess Villa's comment is, can they take that then and expand overseas and offer it to banks and insurance firms in other markets?
They already are. I think one of the biggest actually growth areas for Ant Group is this kind of a white label system. I think they're already being applied in several markets in Southeast Asia.
Okay.
Excellent. Let's take one more question. Do we have one more question there? Do I see anybody with a roaring to ask a question? No, I don't see anybody asking a question. Your room's getting very dark there, Eugene. So I want to ask maybe a question, and then there we go. A question, and then maybe where people can find you. But you earlier on, before we started this call, you were busy putting a child to bed or whatever. I've also got some young children. Where do you think, when they're in their 20s, what do you think is going to be their banking experience? Are they going to be? Is it all going to be really cool and really smooth, a bit like ordering a gift for a friend online? Where do you see this is all going to be going? I know it's hard to predict, but it's moving so fast and pushed even faster by things like COVID. Where do you think our children are going to be experiencing? How are they going to be experiencing all of this?
I hope they will have a much smoother and more efficient and faster experience than we have. Depending on where they live. This part of the world in Asia, close to China, it will probably be very fast. It will definitely be virtual, digital, and cashless. Hopefully, by that time, the Chinese currency will be convertible, and then we won't need to go through triplicate applications to move money in or out of the country. The tremendous amount of wealth from the Chinese economy will probably be released, and it will have a lot to the world, and it will have a lot of implications for asset prices, property prices around the world. Yeah.
Excellent. Okay. I mean, it's hard to predict, of course, right? I mean, currencies might not exist as we understand them. We might be going to a barter economy all over again. Where I know if to find you, basically all they have to do is go and search for Eugene Tang at SCMP, and you pop up on the search engine results, right? Where can people? What's the best way for people to find you? Just that way, or do you have a preferred? Do you want to share your profile in the chat box there on LinkedIn? You're
yeah,
LinkedIn.
I'll share my LinkedIn profile, or find me via email.
Thank you very much. It's been, I'm not an expert in this field, but it covers a lot of areas that I work in, and it's been very, eye-opening to read the report and to talk to you about it a lot more. I have put a link in there to the LinkedIn group for Web Wednesday. So what I do now is I record these things and share them in that group. So anybody who's on this call that isn't a member, click on that link, join the group, and you'll be able to either watch the video or listen to the what's now called podcast on SoundCloud. But anyway, thanks very much to everybody, and thank you, Eugene.
Thank you very much.
Good evening.
Stay safe.
Napoleon. Thanks, Eugene.
Thank you.
Good. Good, guys.